Pricing is one of the most crucial decisions you'll make as a business owner. The price of your product or service directly influences your revenue, brand positioning, and competitive standing in the marketplace. Get the pricing wrong, and you risk losing potential customers or failing to cover your costs. Price it right, however, and you'll optimize your profit margins, attract loyal customers, and set your business on a growth trajectory. But how do you know the right price for your product? Pricing is an art as much as it is a science. Several factors must be considered, from your cost structure to your target market, competitor pricing, and your long-term business goals. In this video, we'll discuss the top 10 ways to price your product for profit, providing you with strategies and frameworks to determine the best pricing model for your business. 1. Understand your costs and profit margins. Why it matters. The first step in pricing your product is to understand your costs thoroughly. If you don't know how much it costs to produce or deliver your product, you can't price it correctly to ensure a profit. What to do? Start by calculating all the costs involved in producing your product, including raw materials, labor, overhead, packaging, and shipping costs. Once you have your total cost per unit, you can add a markup to ensure that your business makes a profit. Your markup should account for both fixed and variable costs, plus the profit margin you aim to achieve. Tip: as a rule of thumb, most businesses aim for a 50% markup, but this can vary based on industry standards, competitive pricing, and your target profit margin. 2. Know your target market's price sensitivity. Why it matters. Pricing too high or too low can be a barrier to your customers' willingness to purchase your product. Understanding your target market's price sensitivity is key to finding a balance between profitability and sales volume. What to do? Conduct market research, surveys, or focus groups to gauge how much your target audience is willing to pay for your product. Are they price sensitive, or are they willing to pay more for higher quality, premium products? Consider factors like the customer's perception of value, purchasing behavior, and income levels. Tip: if your product is aimed at a price-sensitive market, you may want to consider competitive pricing strategies, such as penetration pricing, setting lower prices initially to gain market share, or discount pricing. 3. Consider competitor pricing. Why it matters. One of the most immediate factors influencing your pricing strategy is the competition. If you set your price too high compared to similar products, you risk losing customers. On the other hand, if you price too low, you might devalue your offering and struggle to sustain profitability. What to do? Research competitors in your market and analyze their pricing strategies. Understand the pricing of similar products, and determine where your product fits in. Are your competitors offering higher quality or additional features? Do they have brand recognition that allows them to charge more? Tip: price positioning is important. Are you positioning your product as a premium offering, or is your goal to be the affordable, budget-friendly option? Consider pricing in relation to competitors and your unique value proposition. 4. Factor in psychological pricing. Why it matters. Psychological pricing uses pricing techniques that influence customers' perceptions and buying behavior. Small changes in pricing can lead to a significant increase in sales due to how consumers perceive the price. What to do? Use pricing tactics like charm pricing, e.g., $19.99 instead of $20, or prestige pricing, setting higher prices to convey quality. Other tactics include bundling products together at a discount or offering limited-time promotional prices. Tip: experiment with different pricing strategies to see what resonates most with your customers. Use A/B testing to compare customer responses to different pricing models. 5. Choose the right pricing model for your business. Why it matters. The pricing model you choose will significantly affect your revenue flow and how your customers view your brand. Different business types work better with different models, so it's essential to select the one that aligns with your objectives and market. What to do? Some common pricing models include cost-plus pricing. Add a markup to your production cost. Value-based pricing. Price based on the perceived value your product delivers to customers. Dynamic pricing. Adjust prices based on demand and market conditions. Penetration pricing. Price lower initially to gain market share. Skimming pricing. Price higher initially and lower over time as competition increases. Tip: Evaluate your business's specific needs and the type of relationship you want to foster with customers when deciding on the right pricing model. 6. Factor in seasonal demand. Why it matters. Some products experience fluctuations in demand throughout the year. If your product has seasonal demand, pricing strategies should reflect these changes to maximize profit. What to do? Monitor seasonal trends and adjust your pricing accordingly. For instance, you might price products higher during peak seasons, e.g., holidays, summer, or Black Friday, and offer discounts during slower periods. Tip: you can also use seasonal promotions or flash sales to increase interest in your product during off-peak seasons. 7. Incorporate value-added features. Why it matters. If you can add value to your product without significantly increasing costs, you can justify a higher price. Customers are often willing to pay more for added features or superior quality, especially if they perceive these extras as enhancing the value of the product. What to do? Consider packaging your product with additional services, enhanced features, or a superior customer experience that will justify a higher price point. For example, offering excellent customer support, free shipping, or longer warranties can make your product more attractive at a premium price. Tip: bundle pricing is a good way to increase perceived value without significantly increasing your production cost. 8. Monitor your profit margins regularly. Why it matters. Pricing should not be a one-time decision. As your business grows, your costs, market conditions, and customer expectations will evolve, so it's essential to monitor your profit margins regularly. What to do? Regularly review your pricing strategy to ensure that your prices are still aligned with your business objectives and the market environment. If you notice a significant increase in costs or a shift in customer demand, adjust your prices accordingly. Tip: use accounting and financial tools to track your margins, break-even points, and profitability, allowing you to make data-driven decisions on pricing. 9. Offer tiered pricing or subscription plans. Why it matters. Many customers prefer options when purchasing products, especially when it comes to premium services or long-term commitments. Tiered pricing can allow you to capture more market segments by offering different pricing options for different levels of service. What to do? Consider offering tiered pricing for different levels of your product, where each tier provides more features or additional services for a higher price. Alternatively, consider implementing subscription-based pricing for products or services that require continuous use. Tip: this model can increase customer loyalty by offering more choices and promoting long-term commitment from customers. 10. Test your pricing strategy. Why it matters. Pricing is not a set-it-and-forget-it decision. It's essential to test different pricing strategies and monitor their impact on your sales and profits. What to do? Run A/B tests or focus groups to assess customer reactions to different price points. Look at how price changes impact demand, profitability, and customer retention. Make adjustments based on feedback and sales data. Tip: use dynamic pricing tools to adjust your prices automatically based on demand, competitor prices, and other factors, ensuring you're always optimizing for maximum profitability. Pricing is both a science and an art. The way you price your product can determine whether your business thrives or struggles. By understanding your costs, market demand, competitors, and customer behavior, you can set a price that not only covers your expenses but also allows you to achieve your profit goals. The top 10 ways to price your product for profit covered in this article will give you the tools and strategies you need to set a pricing strategy that works for your business. Whether you choose value-based pricing, tiered models, or dynamic adjustments, remember that pricing is a continuous process of testing and adapting to the changing business landscape. By considering all the factors discussed here and staying flexible in your approach, you can ensure that your product pricing maximizes profits while attracting customers and fostering long-term business growth.